structure there at a time that's usually a lot more chaotic. All right, time now for you to get an update on our business news. For that, we'll go to our Yuka Royer from our business desk. Yuka, another downbeat data on the European economy coming out. The impact of a second wave of a lockdown clearly having an impact on the services sector.
Well, Jeannie, combined private sector activity in manufacturing and services in the Eurozone fell sharply in November. Market's Composite Purchasing Managers Index, or PMI, for the month was 55.3, down from 50 in October. Now, 50 is the mark that separates growth from contraction. In France, activity in the private sector saw the sharpest decline in 6 months and suffered a larger impact from the lockdown than the rest of Europe. Now, the services sector, as you said, was, of course, the hardest hit, with restaurants and bars being forced to close and keep being closed for a while. Here in France, the index dropped below the 40 mark for the services sector, meaning quite a rapid decline after a strong rebound over the summer. Manufacturing activity also slowed down due to fall in demand, and the situation in Europe stands in sharp contrast with China and the rest of Asia, where private sector activity accelerated at the fastest pace in a decade, with factory output in China now back to pre-COVID levels.
Yuka, lockdown measures have hurt the retail sector hard. In the UK, supermarkets have been criticized for taking government aid, even though they boosted sales and paid dividends to shareholders. Tell us a bit more about that.
That's in the UK. Now, like many governments, the UK government has offered a tax relief to businesses struggling with the pandemic and the crisis caused by it, waiving property tax on physical stores for the current fiscal year. Now, this decision was made back in March, but unlike small retailers, many major supermarkets have been able to continue operating and actually boosted sales and profit. And they've come under increasing pressure from lawmakers and media for paying dividends to shareholders while receiving government aid. So Tesco this week announced that it would pay back hundreds of millions of pounds in the tax break. And on Thursday, Sainsbury's and Aldi followed suit. Now, together, those companies have so far brought the total saved by the government in the tax break to about £1.4 billion, 1.5 billion euros. Meanwhile, Marks and Spencer, Asda and Lidl say that for now they have no plans to return the money. The supermarkets, for their part, are also up in the pressure on the state. Sainsbury's is asking the government to review the tax rates system to create a more level playing field between physical and online retailers. And Tesco's CEO called on the government today to provide more clarity about how goods can be moved across borders after the Brexit transition period ends.
Yuka, just talk us through the markets, if you will, before we sign off.
Well, global markets have been rather muted this Thursday on a number of reasons, caught between optimism and worries about the COVID-19 vaccine rollout, Brexit or US stimulus talks. Now, European shares are mixed at midday as negotiators are trying to hammer out a trade deal between the UK and the EU after Britain definitely leaves the single market at the end of this month.
Yuka Royer, thanks so much for that look at today's business. Thank you. Next now to Cuba, where anger continues to mount over what protesters say is a stifling lack of freedom of